It's time for the Southern California housing market update. We're going to cover single family and multifamily data pulled straight from the multiple listing service for Southern California counties. We're going to dive into the median days on market. Plus, we're going to talk about inventory levels. Yes, they are increasing, but should we worry? And stick around to the end because we're going to tell you a county in Southern California where it takes 4 times as long to sell a home right now. And we're going to let you know whether this is actually a big deal or not. Hey there, Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers make the best decisions in this crazy market. Things are changing. It's finally getting interesting in the data. Every other video for the longest time during COVID, it was always talking about things going up, up, and up. Well, now there are new things going up, and by that I mean median days on market and inventory levels. So if you're ready to dive into the housing data for Orange County, LA, Riverside, San Bernardino, Ventura, San Diego counties, hit that like button and let's get started. And it's time to dive into the data we're pulling straight from the multiple listing service to get it to you as quickly as possible so you can see where the market's headed. It's very interesting. Mid-July 2022. In previous videos, I talked about a bird with a lovely curve where 2020 was in the middle and it was a crazy market, but things matched pretty equally. It looked like a bird flying. The bird has died. We are not seeing that in the single family numbers anymore, and we're going to show you the interesting trend. Let's get the number of properties sold out of the way. The sold properties, while handy to look at, that's old news. We want to look at leading indicators. We want to see where things are headed, and we're going to see that by looking at new listings coming and the pending sales, the properties going under contract before they turn into closed sales. And what you can see here, and you will see this in just about every county in Southern California, is that we are at record low number of properties going under contract. And like you can see here in Orange County, at this time of year, this is very, very low. These are low numbers for number of properties going under contract. And we've been seeing this trend for the past several months. As interest rates went through the roof, it led to fewer sales, fewer properties going under contract. What's interesting, in 2018, when rates almost hit 5% at the time, at the end of the year in November, we saw a drop in pending sales, and we also saw an increase in number of listings. And I've covered this in previous videos, but we're not seeing that here in the data. We're not seeing an increase in the number of new listings at the same time that we're seeing the reduction in pending sales. So this is a different trend and doesn't match what we saw last time interest rates increased close to 5%. We're well above 5% now. So you would expect to see a similar trend, but we're not. So what you can see here, and not every county is going to be like this, but Orange County in particular, you see the gap between the pending sales and the new listings. It's actually very similar to years past. 2020, this time of year in July, we started to actually get into multiple offers. I know it's hard to remember that far back, but we were getting multiple offers in July of 2020. So that was a crazy time. 2021, of course, crazy time as well. But that gap between new listings and pending sales, with it being that tight, this in Orange County, this is still a tight seller's market. Now, when we get into the Altos reports at the end, you'll be able to see how inventory is increasing in general, but we're not getting a flood of new listings. So that's a positive on some level. If we were hit with a 1-2 punch of inventory going up and even more listings coming, that's when you get into something like we had in the global financial crisis, where there was nothing stopping the inventory from flowing because banks were foreclosing. So this is an interesting trend. So you can see here in Los Angeles, again, the record low pending sales, they are down. Sales are down in LA, but that gap is not a huge gap between new listings and the sales because the new listings are also down. So we are seeing this similar trend. The market is definitely changing. It's becoming much less of an extreme seller's market, and you'll see that in the Altos reports as well. Moving on to Riverside. So Riverside, there's an interesting trend here, unlike what I just covered for Orange County and LA. And this is why you need to look at local data. You need to look at different price points, different neighborhoods. But in Riverside County in general, we can see that there's actually one of the biggest gaps between new listings and pending sales. So this is a market that's shifting. You can see how tight things were in 2020. It was close to a twist that we've talked about, where there are actually more properties going under contract than the properties coming to the market. So that's what led to our extreme sellers market. But here you can see that this gap has widened in Riverside. So the pending sales have dropped. The new listings have dropped. They're at a record low, but it's a lower record low. So this we have to continue to watch to see how this plays out. San Bernardino, similar case of a big drop in pending sales, but the gap between new listings and pending sales is almost like that of 2018. It's not that extreme. There's a twist like I was talking about, where in 2020, this time of year in San Bernardino, we could see that there were more properties going under contract than new listings coming. So that was an extreme seller's market, and that took a while to unwind, but we're seeing that in 2022, that things have quickly unwound. And Ventura is following the trend as well, and we can see that actually has a big gap between the number of new listings and pending sales. This is definitely a low number of pending sales in Ventura. Things are slowing down, but this is a county that kind of marches to its own drummer. So there isn't as much we can read into this. We could see next month that suddenly pending sales go up and Ventura just does its own thing. San Diego has been the hottest Southern California market for the past couple months. In the Altos research reports we showed you, it was a 100 on the sellers market. It has shifted. So let's get the sold out of the way. You can see that this is, again, down in the number of new listings, down in the number of pending sales. That is a gap that's pretty close. 2018 actually had a bigger gap. So while this doesn't seem like a huge gap between new listings and pending sales, we are seeing in San Diego a big shift, and a very quick shift, where it was an extreme seller's market just a couple months ago. It's now definitely shifting to less of a seller's market. And one of the only places you're going to get multifamily data, we're going to run through it quicker than we normally do because I want to get into the Altos research reports. But don't forget, when you're subscribed to our email newsletter, you get these and you can take a closer look. Want to show you multifamily and single family definitely are not following similar trends. We're not seeing a dramatic slowdown. We can see here OC multifamily moving along strong, LA multifamily moving along strong as well, even with an eviction moratorium in place. Now, I always talk about the eviction moratorium here. It would also affect single family homes and condos as well in LA City and LA County, but it is typically more prominent in this data if it's going to be anywhere. And then going into Riverside, we do see a drop in the number of pending sales, which is an interesting trend. I do want to see if there's something going on in Riverside that leads to further degradations in sales. San Bernardino is moving along solidly. Ventura, not much you can tell from here other than things are moving along in Ventura. And San Diego, we can see there was a huge increase in the number of new listings last year, but we're kind of on the typical lines here for the number of properties that were listed, number of properties going under contract. What I want to share here, the reason that we're not seeing a similar trend in the multifamily data as we do in the single family, at least one of the reasons is that what has gone up? Rents have continued to go up. So these properties are continuing to pencil. Now, granted, as interest rates go up, there will be an effect. It's going to definitely have an effect on cap rates, but there's still enough of an increase in rents, especially if an owner can get them closer to market rent, that the property still pencils. So this is an interesting thing that is leading to no real slowdown, no real change in the data like we're seeing in single family. Let's dive into the Altos research reports, and we've added in the national data as well as statewide data for California. Very important to give us perspective. We're going to look at two things on here quickly. When you sign up for these Altos research reports, you'll be able to look at all the data here, and you can do that by clicking the link below. You will then be able to choose exactly which reports you want to receive, and it goes down to the zip code or city level. But there's two things we're going to take a look at. We're going to look at the median days on market. We'll look at that quick statistic here, and we can see that at the national level it has increased. It was 21 and then has gone up to 28 days. The other thing we're going to look at is inventory. These are leading indicators of where we're headed in the market. As the median days go up, that means the market is theoretically slowing down. As the inventory goes up, that's where we can also start to see we may get to a point where we start to have price reductions. First, we need to get a slowdown in the increase of values before we actually could potentially get to a point where it turns the other way. So that's an important point. But looking at the inventory, we get rid of the 90-day average, we look at the 7-day average, and you can see that on a national level that we are approaching the inventory from 2 years ago. We're approaching 2020 inventory. This is a quick increase. We haven't seen it in the previous times. You haven't seen it go up this quickly. So this is a quick turn in inventory at the national level. It is not yet near the inventory in 2019, but we got to keep watching it because this was a big increase, and this line, this big increase, correlates very well with the big increase in interest rates as well. Moving into the California data, you're going to see something, if you look closely, that there's a big difference between the national and California numbers. When we look at inventory, look at the dramatic increase in inventory, huge slope, just like we saw at the national level, but even higher. And you can see that at this point in time, the inventory in the state of California has surpassed 2020 and is going to 2019 levels. And it's very important to continue to track this to see if this continues on this trajectory. Days on market has also increased as well. So at the national level, we went from 21 to 28. Here, we're going from 14 to 28. So that's a doubling in the time on market. 28 days is not a long time on market. Keep it in perspective, but it has doubled, and that's very recently. And since April, the days on market has doubled at a California statewide level. Moving on to Southern California, this is where we are real estate brokers. So if you need help anywhere in Southern California, reach out and it'll either be us or one of our team members who helps you with your sale or purchase. Let's look at Orange County, and similar trend. We're going to see this in all the counties. We see this increase in inventory. You can see it's pretty sharp, not as sharp as some of the other ones we're going to see, but still that's a fast increase and still below 2020 levels, but definitely approaching it. Not quite near, maybe halfway to 2019 levels. And then as the days on market, we were at 7 in April, mid-April, and then it went up to 14, and now we're at 28. You could say as of April 15th, it takes 4 times as long now to sell a property as it did in middle of April. Moving on to Los Angeles, big increase in inventory, definitely past 2020 levels, approaching 2019 levels, not as quickly as the state of California. And don't forget the market action index up here. Take a quick look at that. It shows you how things have changed month over month. Median days on market, they were down to 14, up to 28, but it's been at 21 pretty consistently. So we're not seeing a dramatic increase in homes taking longer to sell in Los Angeles County. Riverside also sees an increase in median days on market up to 28, was at 14, but still low numbers, and inventory has increased very quickly here, closer to the state of California increase, that sharp increase, and we're definitely past 2020 levels and going to 2019. So we have to keep watching. The market action index shows that the seller's market is decreasing, and we're getting closer to a buyer's market, but still a solid seller's market. San Bernardino, we've got the days on market going up from 21 to 28, not a huge increase, but look at this slope in the increase in inventory. This is one to watch because we have definitely surpassed 2021 and 2020 levels. Now you remember in the other data we showed you that things were way down for the number of listings in 2020, so it was a hot time. But you can see that that was a quick increase to get us to this point, and we're approaching the 2019 numbers. Riverside and San Bernardino, something funny's going on. We're going to have to keep tracking it to see how this plays out. And Ventura has one of the most gentle slopes for the increase in inventory, close to 2020, not at 2019. And we see the increase of days on market from 14 to 28. So Ventura, like we always say, marches to its own drum, doesn't look like we have a dangerous increase in inventory at all, but we'll keep watching. And San Diego, we can see, like I said, the market action index, it actually was 100% at one point in time, 100% of seller's market. It has dropped off significantly and very quickly. And we can see that inventory has ticked up very quickly. So we're past 2021, 2020 levels, and we are into going up to 2019 levels and very quickly, probably the closest of all the Southern California counties. And while that happened, we've gone from 7 days to 21 days for the median days on market. Definitely have to keep watching San Diego because this one was super hot and then shifted very quickly. So let's see where this plays out. So you can use the data and we can go ahead and create some clickbait that shows it takes 4 times longer to sell a home in Orange County. Well, that's really not putting things in perspective. Let's go ahead and show you and put things in perspective. We can use the Altos research reports to show median days on market, and you'll see that things were skidding along. Early in the year, things were going 7 days. It was very quick. Then we got into April 15th, 7 days, and now we're at 28. So it's now taking 4 times as long. That's correct, and it may continue to go up, but put it in perspective. Last year it took 14, 2020, and it was a hot market then. It took 42 days, and even going back 3 years, it's 56 days. So here's some math for you. It's taking 4 times longer than it did in April, but it's taking half the time it did in 2019. So it's not really fair when people just pull these statistics out. We have to be fair. We have to put it in perspective. And we also have to continue to track these numbers to see where they go. Make sure you tune in later this week because we're going to release the Southern California foreclosure report where we run through the foreclosure numbers for all of Southern California. And more important news, next week the Fed will be meeting again and we will have to see where they take the Fed fund rate. I want your predictions below. Is it going to be 0.75 or is it going to be bigger? Let us know in the comments below. Plus, tell me what you're seeing out there. Are you seeing multiple offers still? Are you seeing price reductions? Let us know what you're seeing in your markets. Make sure you subscribe for those Altos research reports. We have a link below so you can do that. Not only will you get that amazingly up-to-date data, you're going to get my free weekly email newsletter. You're not going to want to miss this next video with more data about the Southern California housing market. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.